Welcome to this week's Cattle Call. I'm Susan Littlefield. An interesting week we've seen in this market trade. We're going to talk and highlight about that stumble we saw within the feeder cattle market. What does that mean? And was it just a quick flash in the pan, but still, what the heck happened? In that short window, we saw a lot of panicking, shall we say. We've had some good numbers this week on the kill side, some decent cash numbers. But my question is, and Brad kind of alluded to it when he and I were talking ahead of this program, is there some leverage possibilities and some bid passing that could happen from a feedlot perspective? We'll look at all that on this week's edition of the Cattle Call. Brad Kooima joins us. You can see he is joining me on screen. So let's talk first. November 1 has come and gone. That meant vaccination requirements for some of these packing plants.
Yeah, I think that's a decent place to start, Susan. The trade was quite worried about this earlier. One of the majors, is going to demand a proof of vaccination. And that caused some bad days in the marketplace, and certainly there's been days where absenteeism has been a big problem. So being dialed in, I think last time we talked about this, we talked about whether or not what's one thing to watch. What's one thing to watch? Well, for me, one thing to watch is the slaughter level. By the way, today's slaughter again was very solid, 122 again. That's a nice big number. But to your question, Monday kind of came and gone, and I understand they had a really good day. Kill was certainly big. Is it perfect in terms of efficiency? No, it almost never is. I'll tell you that. There's been some dialogue among some of us that are, working on some of these issues of trying to drill down to what really is our carrying capacity, our killing capacity. I mean, legitimately, what if we would just kill, say, 5.5 days a week and run at a 90% efficiency or a 95% efficiency? What about a double shift? I mean, there's a lot of things that some of us feel like we're not really testing the upper parameters or the limits of what we could actually harvest, I don't think.
Let's talk about that stumble of earlier this week. I mean, in a very short amount of time, we went from some decent trade in that feeder cattle to not so decent. What are you hearing, and what's been going on there?
It's one of those situations where one's not proud to be part of a market that can be so easily disrupted. The feeder cattle were struggling a little bit already, because of this rally in the corn market. But yeah, I sat right in front of the screen and watched, like, January feeders, for instance, go from 160 lower to 570 lower in less than a minute. The old days when there was a pit, I could have given you a real accurate description of who shot who, probably. Anymore now with obviously all computer trade, it's more difficult. But speculation, I think, is that we first wondered whether there was an error. That happens from time to time. Somebody puts in an accidental order selling way more than he wanted to. But we think it's maybe more likely that there was a large stop that was triggered in a very, very thin market. The feeder cattle open interest is horrible, 40,000 contracts. Like live cattle, it's like 300,000. Corn, 1.5 million. I mean, it's just a whole nother ball game. And so when you have a thin market, light open interest, and thin volume, a couple hundred contracts, in this case, that's about all it looked like it was enough to just crater it. Now, thankfully, we came back about $2.50, $3 in the space of the next 10 minutes. Yesterday, sharply higher, and today again, sharply higher again. So now you sit back and look at that feeder chart and go like, well, that looks like a classic V bottom, right? A blow off bottom or whatever. Or, unfortunately, there is kind of a blood in the water mentality sometime in the futures market, Susan, where, it sometimes it feels like it's me, or it's directed at, particularly, okay, now that I'm out, now the market can go up or whatever,
Right.
And, so there's some of that where it looks like, okay, now that somebody's been taken to the woodshed, or the sharks are done feeding, now the market will be okay again.
We saw the 128.50 talk of 130s. Good news for cattle producers. Does that mean maybe we're in the driver's seat a little bit?
Well, when you give a little intro there, use the word leverage. Boy, do I like that word. Boy, do I wish we had more of it.
Yeah, I bet.
But it's a little, the wind's blowing from a little different direction here the last couple of weeks. I think we've talked about it every week here the last little while. that I think the subtle difference is, and not so subtle difference is that we finally dare to pass a bid. Months and months and months of, well, I guess I can get 122. Yeah, well, we better sell them. What are we going to do? And now we dare to pass a bid, and that's a big deal. I think it's because you've worked through a little bit of the backlog of cattle that we had. Now, I've been of the view, as you've heard me say on this program over and over, that I think that the overall numbers of cattle are overstated. Nobody's fault. Just like the numbers in the hog report has been overstated the last two times, just like the bean number was overstated. You remember that one, don't you? How about the corn crop 2 years ago that they finally owned up to? Sitting in my neck of the woods here, Susan, this would be a time of year where we'd be looking at cleanup of big, long fed, overfed calves, and lots of them. We do not have them here. So with that, and the cattle aren't very big, you can say, well, I don't know, I'm bid 128, but it feels to me like we're going to get 130. That's what we're all going to ask. Now, whether we get it or not, I think we will. If we don't tomorrow, I think we will by next week. But it's that kind of a little bit of that arch in your back a little bit where you can say no. It's nice to get us back just a little bit of leverage for sure.
Charts are looking okay though.
Gapped higher into new highs for the move on the D's and the Feb. I would have liked it if we'd have pegged it and closed right on the high end of the range. It just seems like every day the haters come in the last half an hour and try to break the market off the highs. And of course, you got to remember, you got a futures trader that he'll do what works. He doesn't know the difference between a unicorn and a heifer. Okay. So if every day when they get higher, you can sell them at 12 o'clock because it always breaks at 1 o'clock. Well, that's what those people do. And one of these days we're going to find out that there's a paddle big enough to fit their rear end also. But we still were 170 higher on D's. It's a good day. We're still up 142 on the Feb. Solid day. Bull spreads work. So no, I'm going to go home feeling good about the action again today, like I did yesterday.
All right, sounds good. Thanks for joining us this week.
Joining us
has been Brad Kooima. That's this week's Cattle Call. As always, just a reminder, commodity futures and options do involve a substantial risk of loss, and they're not suitable for all investors. That is the Cattle Call. I'm Susan Littlefield.